Splashcreen. Wake up, motherfucker.
Yo, what's up? It's April 27th, 2026. Okay, guys. All right, guys, let's see what's up with the markets. Let's see, check this out. All right, guys. So, we're getting a little pullback finally on the SOXX in the character here. So, let's just look at the volume profile. Okay, just look at the volume profile here, and we're seeing some changes already. We're not going up like we were since the uh, April 7th taco. Okay, so we got this huge gap into April 8th here. I'm looking at the SOXX semiconductors because that's the leading group we got going on. All right. And we start seeing some changes before the Intel earnings. All right. So I saw this. I'm like, okay, but no breakdown below the opening of Thursday. But we did close at the bottom half. All right. Then we had the gap up on Intel. Okay. Pull back, but immediately bought up. So not there yet. We closed at the top of the range of the day. And now we have today where we opened up here at the top and then started drifting down. And now we're just hanging at the bottom here at the low of Friday. So this is probably a change of character that we are waiting for. I did buy, SOXS at the end of Friday. I noticed certain things. I was just like, well, okay, Intel's done. It pushed up Qualcomm, right? Pushed up Qualcomm and AMD. Those are the two next big semiconductor earnings. Of course, you have Microsoft, Google, Amazon, Meta all reporting on Wednesday after Powell speaks. Okay, so Powell will be speaking on Wednesday. This will be his final FOMC. It's 2:30 Eastern. You'll hear him talk, and then it'll be closing. All right, and then Wednesday we'll have a whole bunch of earnings. So I have no clue what Thursday is going to be, Thursday morning. And then after that, Apple. All right, SanDisk and Western Digital. Those three will be the two memory stocks, and Apple. So that will be the final major components this week for the S&P 500 earnings season. All right, that's it. That's basically it. The only thing left over will be Nvidia, which is like 3 weeks away, AMD the following week. So AMD, then you have Nvidia. Then after Nvidia, another week, you got to wait for maybe, I don't know, maybe it's the same week. They changed everything now. Sometimes it's the same week, but usually it's another week until you wait for Broadcom. Then you got like Marvell, maybe a day after Broadcom, and then Oracle. All right, those will be the next ones. Oh yeah, I forgot to mention Microsoft too. So Microsoft, Amazon, Google, Meta, those four, they're all in different sectors though. Amazon is like retail, but then it has a lot of Amazon Web Services. So data centers are important for Amazon. Also AI too. They build their own chips as well for their own internal processes, not external. Google and Microsoft, external, right? They actually build data centers, but they use that to sell their software or services. And then you have Meta, which is all communications, pure communications. Google is communications as well. Okay, so they kind of like, they're not stuck in one box. All those four companies spend a lot on data centers, and that will affect the semiconductors as well. If they're not spending as much going into next quarter, then maybe you'll see a pullback on semiconductors. All right. Because we have to look at the valuations right now. The valuations are crazy high. So I I don't think you want to be buying anything. Like you already see people are willing to sell certain things, right? You see here Lumentum, which is not semiconductors technically, it's hardware equipment. services, but they do the optical fiber related stuff. Sienna, same thing. They build the chips for the communications, the process, all the optical communications, copper communications, coherent. Yeah, you got their lasers too. And then AOI, same thing. They build the transceivers that house the lasers that connect to the copper optical fiber. Okay, so these guys have been pushing things up. You see, Micron, they still want to pump this thing up. All right. Micron is basically the largest component of semiconductors right now. All right. After Micron, it's NVIDIA. Okay. Then AMD. Okay. Then Broadcom. Then you go down the list to the equipment manufacturers, Applied Materials, LRCX. Okay. You have CLAC, Clock Corporation, ASML. Now you notice like these things, you see a lot of red bars coming through now. So in the morning they go down and then they try to hold. They pop back up, but then the next day morning goes down. So when you start seeing more of this, then you know it's going to have a hard time pushing all the whole semiconductors up. Obviously, this is the game they've been playing. If one thing goes down, they'll push up another to keep it from dropping too far. So we're seeing SanDisk and Micron. I'm sure somebody came in and said, oh, Micron earnings should be good. SanDisk earnings should be good, even though, yeah, they're going to report in a few days, whatever. That's just how Wall Street does in earnings. They kind of push everything up into the peak. And that's what they did with Intel, right? You saw them. They just pushed everything right up there and then it pumped. Right now, Intel is the most overvalued semiconductor stock out there. So I'm going to show you this graph here, or this chart, and it's amazing how expensive it is now. It was expensive before, but it's really expensive now when you consider the growth projections, when you compare it to Micron. So let's look at this here. This is a good tweet someone made. That's a good thing about Twitter. Like, people just make these little things and just like, okay, I can watch all this stuff and see what other people's opinions are. Let's look at this multi-year price to earnings growth ratio. Okay, so Intel now is 3.2 times the price to earnings growth ratio. If you look all the way towards the end, Micron, it's 0.2. So I don't know how up to date this data is, but let's assume it's up to date. Micron is around $500 right now, right? Let's say around $500. So Intel, I don't know if this is up to date after the Intel pump, but let's assume it is. At 80 something dollars, is 3.2x versus the 0.2x of Micron. So that's around like what, 16 times? And if you do 16 times like 500, right? Like you can figure out like, bro, so Micron can go up to $8,000 per share to be the equivalent valuation that Intel is right now. Like Intel before earnings was already like 120, like something X forward price to earnings. Like, come on, bro. Bro, Intel was already expensive, and now it's even more expensive. And this is why I don't follow valuations. It's like people are willing to overpay for something like Intel, but not overpay for something like Micron. Micron, you might think like, bro, Micron is up like 200, 300% from October, but it's still undervalued compared to every other semiconductor, because memory was the worst. It's more commodity, right? So they don't overpay for Micron like they would overpay for Nvidia or something else. Like even TSMC is not really overpaid. They don't want to overpay for TSMC, but they're willing to overpay for everything else above it. So when you look at Intel is kind of like AMD plus TSMC, right? They're a chip manufacturer. They actually manufacture the chips, but they also, they make their own products. TSMC doesn't make their own products. They don't make GPUs. They don't make CPUs. They build it for other people. That's what the fabless ecosystem is. Like Intel, Nvidia, ARM, AMD, they design the chip. Micron, like they also build it too. I think Micron has their own. They don't offshore it to Korea or anything. Everything's built in-house as well. But most people, they don't build it when they design it. They design it and they give it to someone else to build, manufacture. Okay, that's what when I worked, that's what I did. All I did was like I build it. I draw it on the tool. You just draw your circuits in the tool, and then you send your design off to TSMC, ST Microelectronics, Samsung, whoever your fab is, and then they build it for you. Okay, Intel does it all in one place, but is it worth 3.2x? Well, I don't know. I guess so. I guess in a way you could think that it is because they're going to take away customers for TSMC, right? So they have room to go up. TSMC doesn't have room to go up. They already build most of the digital circuits around the world already outside of memory. They don't build memory chips, okay? That usually goes to some houses in Korea, probably using Samsung or some other cheap, or Japan or China. And those guys, that's why Intel got out of the memory business, because they can't make a lot of margin on memory. Memory is a low margin um, uh, product. All right. So let me show you this one too. This one was nice. This image was nice too. Let me see if I can find it. This one's nice. Okay. So in some industries, there is greater potential for pricing power. That means I can overcharge for something, right? I can get very high margins for something. And also it gauges the stability of those margins. So the standard deviation on the x-axis down here. If you look at it, look at software. Software is all the way to the right. That means software can be very cheap or very expensive at any given time. It's not stable, even though I can charge a high margin for it, with subscriptions or whatever. I can charge you an arm and a leg for something. It's not very stable. They have to change their price depending on demand, right? And there's a lot of competition too in software. People can easily copy what you're doing and undercut you very rapidly. Semiconductors is hard, right? It's hard to get in. You can build a very nice moat around your business. So Intel protected that for a very long time with the Pentium in the 90s. So it's like, oh, well, you want to run a PC, the only place you really had to go to was Intel and AMD. That's the only reason AMD survived. AMD survived because the government said, no, you can't have a monopoly, Intel. So they were forced to allow AMD to survive. So in a certain way, Intel is also getting government help now because they need people to make fabs in the US. So in some ways, Intel now has a new moat. If you want to build a chip all in the United States, Intel is kind of the only place you can go for advanced digital fabrication. Okay, and look at the other ones. Biotech, that's a given. That's why drug companies can do what they do. And you have beverages, soda. That's why if you look at a lot of soda energy drink stocks, they do very well. Coca-Cola is actually a very good stock. If you look at Coca-Cola America Holdings, that stock is not bad at all, not shabby. So that's another place you can look at. Celsius is another energy drink. That stock hasn't been doing well for a while. I mean, it went from like $1 to like 50, $100. So you can see, like, yeah, software energy drinks. Soft drinks, energy drinks. Yep, that's really something that they can boost their margins on. Anyhow, so those are the things. Oh, watch Frito-Lay's. Isn't that owned by Pepsi? Pepsi owns Fritos. Anyhow, I thought Micron would be a good one. Yeah, Micron could be, but the thing is, like, as we see on this chart here, people aren't really like. Yeah, this is the problem. It's like, can you assume that people are going to overpay for Micron like they are Nvidia? Like, that's the hard sell, right? if you believe that in the future people are willing to overpay for it, for that stock, yeah, there's a lot of room to grow because it can go up to $8,000 before it matches Nvidia's current valuations. But not many companies are going to go to. I mean, not Nvidia, Intel's. I mean, Intel's earnings right now, it's just like it's just this is just a one-off, right? So you got to be really careful. That's why when you look at the chart for Micron, it's like I think it's done what it's supposed to do. I just have a hard time seeing it like go any further without like explosive new growth. You know, usually when Micron has its like little run up, that's the end of the semiconductor cycle. Yeah. So here, let me show you this thing here. To SOX ratio. Okay. All right. Save that. Okay. 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 Yeah, I haven't looked at Pepsi. I've definitely looked at Coke. I haven't paid attention to Pepsi. I'll take a look at them. But I've done Celsius. I've done Coke. But yeah, I haven't really paid attention to Pepsi. Yeah. Okay, looking at for financial, I mean references on scientific trading makers, trading tactics. I never heard of that one. I never heard. I haven't read too many books, honestly. There's just so many out there. And I always go on this premise that book out there for something is probably not going to work anymore. If somebody publishes a really popular book too, it's like really not going to be too useful. Once people start doing it, it stops being effective, honestly. And the DeMark stuff, it's like there was such a huge barrier to entry. Like people had to pay 20 something $1,000 a year for a Bloomberg terminal and then additionally pay $500, $800 per month for the DeMark stuff. But now it's like, his son took over and he has this web-based service. So now it's kind of like the barrier's gone down and still not many people know about it. So it's still useful. So as long as it's useful, I'll use it, but or not well used, not popularly used, I use it. But if it's just like too popular, then yeah, it's not going very well. That's really the problem. Everybody's gonna front run your trade because everybody sees the same thing you are, and it's just like, oh fuck. So you got to use something that's not too common, not too common. And so hopefully the cycle stuff is not going to be too common still. A lot of people don't believe it, which is great. I really don't want people to be believing this stuff right now. If everybody sees the same thing, they're just all going to trade before we trade. And it's like, what the hell? It doesn't work. Oh, yeah, that's the problem. That's always going to be the problem. All right. Okay, let's see how much time I got left. Because yeah, everything's until Wednesday. There's nothing left much to talk about. Oh, okay, so let me get this here and let me load up some things. Let me load up some valuation things here. I think this will be interesting. And then I have some ChatGPT stuff, right? Okay, good. Okay. Okay, and then I'm gonna load Twitter. All right. Okie doke. Okay. All right. All right. Let's see what I posted. I post something. I did post something, didn't I? Blah, blah, blah. No, I don't need that. I don't need that. Oh, egg prices are going down. That's good. Okay, probably replies or something. Let's see. Okay, blah blah blah. Yeah, I think food inflation is going to go up, so I got to worry about that coming around. Let's see. No, I don't think this was this one. Nope. Nope, nope, nope. Let's see. Wash. Yeah, I talked about the new Fed chair. The new Fed chair wanted to change the way they looked at inflation. So I don't know if I reposted that here. I reposted it here, but I probably posted somewhere else. Let me see. Okay. This is definitely one of them. Because he's gonna change like the way they do the inflation metric. So usually they use the core PCE. So Warsh said he's dismissed core PCE as rough swag, whatever the hell that means. So that was during his confirmation meeting. And he said he preferred to focus on better gauges of underlying inflation like median or trimmed mean. I don't know what the heck that is. Okay, so this got the attention because Dallas Fed trim mean was 2.3%. So that's below the core PC of 3%. So it looks if the Fed is going to change how they look at inflation, like they don't want to know that inflation is high. They know it's high, but they're just going to ignore it. Okay, because that will give the new Fed chair the excuse to probably lower interest rates sometime sooner than what the market is thinking. The market is saying that we will have the current inflation rate all the way through 2027. So if the Fed wants to lower interest rates before then, they got to have a good reason to, right? So Warsh is already saying this. And Donald Trump is going to be yelling and screaming and say lowered interest rates, interest rates. They don't want to care about inflation at that point. That means they just want to pump the stock market, which is great. All right. So semiconductors probably can go up another 200% next year. Okay. So we're not at bubble levels yet. We're not at .com levels yet. You think this is a bubble? Yo, once they start cracking down on the interest rates and inflation is still high, who gives a fuck, right? You got to ride it. So right now, these are the regimes that we've been through on semiconductors. Okay. This was the peak years I was at work. Okay. So between like 2015 into 2018, this was when everything was swell. Semiconductors was great. So if you were in a semiconductors company, you were making hand over fist money. And this chart here shows semiconductors over the S&P 500. So around pretty much at the beginning of 2016, all the way through the first like maybe quarter of 2018, you were doing pretty well. Okay, you were outperforming the S&P 500. That was one good regime right there. And if you look at the bottom here, this is the semiconductor leverage, SOXL, over the semiconductors. So this was a good time to leverage your positions in semiconductors because you had a very good trend. The trend was your friend. It was going up in pretty much a straight line. Nice, right? Okay, 2018 through 2019, not so good. Everything was zigzag, 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 zigzag. Okay, very crazy. And then you had this huge move up at the end of 2019. This was because of the Fed. The Fed gave up. The Fed was shrinking their balance sheet. Okay, and then they gave up. They just said, like, well, okay, we'll stop shrinking the balance sheet. We'll stop raising interest rates. Something's wrong with the financial plumbing because 2018 we had a little correction. A little correction. I think we dropped maybe about 15, 18% at the last quarter. And then at the beginning of 2019, they stopped. They stopped shrinking their balance sheet. The bond market was screaming hell. The junk bond market was acting funny. There was something funny going on with the junk bond market. They stopped. And that gave it a little relief, okay? 2019 was still wild, though. It went up, it went down, and then it went up, and then it went really up just into COVID-19. Okay. So from COVID onwards, we had this nice push up again. Very good. Semiconductors did very well. Okay. So you bought a lot of NVIDIA stock. You would have been really happy at that time, along other stocks. After that, you hit the peak of tech. 2021, around February, biotech started dropping. And then everything else in tech went sideways. It got stuck. The only thing left going up a bit were probably some oil and gas companies. Okay. But otherwise, I think most tech in the NASDAQ were going sideways at that point. And then inflation didn't go away, and the Fed started quickly ramping up interest rates going into the Ukraine-Russia conflict, and then we got a lot of issues there. And then 2022 was a bad time, right? We went back down, and then we entered in the third phase of going up. So we hit a bottom, probably around October into December. And this was another great time to go back into tech because semiconductors, again, went up. This one is a little bit more jagged. Okay. It wasn't a straight line, very jagged, very jagged. But you could have bought SOX L all the way up into the yen carry trade panic of 2024 around July. That's when the Japanese yen just went too weak, and then the Bank of Japan had to fix it and stop it, and that caused the crash. And semiconductors went all the way back down because a lot of people that were using cheap yen to buy stocks in the U.S. market got out, and that caused a big sideways motion into the tariffs. Okay, and then when the tariffs happened, we went down again. After tariffs, I bought SOXL. Okay, we went up. I didn't expect it to go this up, though, into January, but it did. And so that was like 500% on SOXL. This was probably the best, cleanest move up from last year I've seen. Okay, I think it beats out COVID a little bit. I think this one was way stronger than the COVID one. Maybe I didn't double check that, but especially if you held through now, that's definitely obviously very good. But if you held till January, I still think you beat the COVID one. So this is the last one we've been having. Okay, we've been moving up. Semiconductors once again is leading everything. Each of these moments, like semiconductors, just keeps growing and growing as a larger and larger portion of the whole S&P 500. And now it's beyond semiconductors, right? Now you see it in energy, like energy storage. Like we're going to have to look at other stocks like NEE. NEE is like a utility stock, but it's up from earnings last week. So that's another one you got to look at now. VRT, basically infrastructure for data centers, also very good. And then, of course, you have Sienna, AOI, Coherent, Lumentum. So those things are not technically in semiconductors, but they support the whole data center growth story. So this is going to spread out, okay, away from semiconductors into those other things. So we got to look at those other things more and more, and less just only semiconductors, because I think this is just way too played out. If you look at the bottom here, SOXL over semiconductors ratio is almost as high as the peak in 2021. This was the peak bubble caused by all the money printing done by the Fed and the federal government with the PPP loans, right? So a lot of people were just getting loans just to buy stocks, okay? And because interest rates are very cheap, you can also go to your brokerage and get margin accounts. You would pay very low interest every month just to buy more stocks. They'll give you free cash, right? Well, that's not free, but technically, when the Federal Reserve slams the interest rate down to zero, then everything else will go down proportionally, right? So how, like, mortgages were down to like 2 point something at the lowest point. So think what happens when you borrow money from your brokerage just to buy more stocks. So that helps this bubble go. Okay. Now we're still having high interest rates. Okay. Right. Guess what? If this fool really is going to tell everyone that inflation is just 2.3%, it's not 3, and then next year it's going to be like, well, inflation is still at 2.5%. What are you talking about? There's no inflation. And he's just going to lower interest rates anyway. Well, then I see no problem in this thing staying high, right? And it's not just going to be just semiconductors. It's going to be a lot of other stocks too. And we haven't looked at lithium yet, or uranium. Those two will be coming up. So there'll be a lot of money sloshing around the system, and it's going to find other things to get into, and especially like oil and gas companies. Okay, let's look at the PE ratio of semiconductors right now compared to where it was. So if you look at it, the forward PE ratio is still 30% lower than where it was at the peak in October. So I keep talking about October. I keep talking about like just before Halloween. That was the high of the S&P 500, right? Pretty much. I mean, it went a little bit higher certain times this year, but for the most part, October, I would say, is like the major high that we had, okay, for the S&P 500. If you look here with the semiconductors, though, it only touched that 2 times this year. All right. S&P 500 probably went a little bit over a few times before March. And if you look at the price, okay, the price went down 15% from that high in October, and it went now 60% over that price in October. But if you look at the valuations, it's still low. Why is that? It's because all these guys have changed their projections. Okay. Everybody in Wall Street have basically said, oh, there's higher growth next year. There's going to be higher growth next year. So the forward PE ratio now is still low because everybody now expects semiconductors to keep growing like crazy. All right. So that's why they're willing to overpay for something like Intel. And if we get the interest rates to go down later this year, oh my God, this will bubble up like crazy. This is nothing. This move here, you think like, oh, negative 15 to positive 16, this 40% move is like gonna be nothing. So within 1 month, you went up 40%. Guess what's gonna happen next year? You're gonna see this junk go up 200%, and you're gonna be like, what, why? Yeah, because it's just the expectations have changed. It has nothing to do with the actual price now. It's just the expectations that keep changing. So if we look at the technology forward PE, so this is the XLK ETF, it's 23. It's like, what? So even though we've dropped like all the way from 30x, we're still relatively cheap on the whole technology sector because they changed the expectations now. So it used to be overpriced. Now it's still underpriced. Whoa, come on. XLK is already up 8% for the year. You're still telling me it's still below the 5-year average of 25.7 forward price to earnings ratio? Oh, dude. Okay, here's the S&P 500, the whole 500 companies, right? So tech plus everybody else. Okay, we're higher than the 5-year average of 20. We're 20.9, but not too crazy, right? We're not back at 23x. Let's look at energy. You see this? This is why energy stocks are such a pain to hold, buy and hold, because when people get excited, they're willing to overpay for energy stocks. When the hype disappears, they go back to their usual average. The usual average for energy companies is 12.8x forward PE ratio. People don't want to overpay for a Chevron. They don't want to overpay for ExxonMobil. They don't want to overpay for PE. I mean, British Petroleum, BP, or ConocoPhillips. They just don't. Halliburton. They just don't. So that's why you don't see like these huge moves on something in energy like you would in technology. Okay, this is the reason why. It's just the mentality of the people. The mentality is we don't like to overpay for oil and gas companies. We're definitely willing to overpay for technology to the point where we'll pay for 30 times what it's worth, but we won't pay for more than probably 15 times what energy is worth. That's why you see this huge kind of like bubble up and bubble down in valuation. Okay, that's why it's really painful to buy and hold energy stocks. They're just not sexy. If they're not sexy, people don't overpay for it. So it's just really a psychology thing, right? Why are you willing to overpay for something like this rather than that? Everybody can see that oil and gas for at least US companies are going to do very well in the coming years. Like you see a lot of rerouting of the shipping lanes. Everybody is going to the Gulf of Mexico right now, or Gulf of America, whatever. And they are filling up with US crude oil and US natural gas, but people still don't want to pay 20x for it. Maybe later on, but right now, no. They still want to run back to technology. That's just the way it is. Okay. Okay. So let's look at PE valuations relative to history. Let's see which ones are the most expensive right now. Industrials are, it seems. This is what gets me a little bit worried. I've talked about Deere. I talked about Caterpillar. I like those two stocks. Honestly, I do. But relative to where they are historically, they're overpriced. Even though I think they can easily go up higher in share price, you can see everybody seems to want to run back to technology. When you take away money from one place, it has to go somewhere else. That's the reason why like something like Intel could be overvalued right now. They all just ran over there. Will they take that money and go to Caterpillar or Deere? I don't know, because historically industrials never really goes that much higher than where they are right now. It's like 94, 98% of the percentile of 10-year to 30-year history. So it's really expensive, those stocks, if you look at historical valuations. Um, if you look at utilities, see, people don't want to buy like a utility stock that's pretty much more than 19, I guess. So 19 is around the average. And then if you look at banks and energy, they are the most hated stocks. Okay, people do not like to buy Bank of America, JP Morgan, or an Exxon or a Chevron. They are the least valued down here. So people only want to expect to buy it at such cheap valuations. Okay. Warren Buffett won't buy any of these. Warren Buffett will be like, bro, wait until it becomes 10 10 forward PE. Then I'll buy some stocks. But if it's like 15, maybe that's an okay deal, but not a great deal, right? Those guys are just bargain basement buyers. They only deploy their capital when something is extremely cheap. And that's just in the eye of the beholder, right? That's just in the eye of the beholder. I actually have like oh yeah, I have this funny chart. So speaking of Warren Buffett, so Warren Buffett is the greatest investor of all time. In the 20 months leading up to the dot-com peak, NASDAQ was up 290%. Berkshire Hathaway was down 45%. The press called him finished, out of touch, too old, didn't understand technology. Then the bubble burst. The NASDAQ lost 78%. Berkshire compounded quietly for the next 2 decades. The pain of underperforming a bubble is the price of not being in one. No pain, no premium. So, yeah, if you don't want to play a bubble and you stay out, you're going to underperform. Okay? You have a choice right now. Either I don't know how long this bubble will really last for sure. I don't see enough reason for me to be worried right now. I'm looking at the margin accounts, I'm looking at the bond market. There's nothing that screams to me like, oh, there's something big around the corner that's going to be a crash. No, I don't see it. So your choice is this. Either you stay out of this market because it's going to get worse. It's going to get more bubbly. We haven't seen the real bubble yet. You either stay out of it and just suck it up and not participate. And you're going to be like Warren Buffett. Like you just look crappy, right? You look like an idiot for at least maybe a few years. And then the bubble will keep going. The bubble might just only last next year. That's it. That's my bet. I think it's only going to last until early 2028. So only 1 year of a bubble. It's not going to be like a multi-year bubble like the .com. I don't think so. But I could be wrong. All right. We don't really know until we get there. But this is probably the situation here. Warren Buffett has a bunch of T-bills. It's all in cash. He just gets 3.5% or 4% every year. He looks like a moron now. Like all these stocks are going up like crazy. Well, that's the price you pay, right? Oh, yeah, I noticed gold. Yeah, gold isn't doing swell. So I don't know. I'll have to check the silver and palladium prices later on. Anyhow, yeah, so this is the thing. This is what you're going to have to fight against. If you're going to play the bubble, then you're going to have to accept the fact that it's going to be way overpriced up here. We haven't even gotten there yet. And that's it. That's really it. I really like real estate right now. Real estate did really good the last week, actually. But shoot, I think I'm gonna have to wait for the new Fed chair though. I was really thinking about real estate too. I was looking at that. Real estate looked pretty good. Anyhow, this is where we are. You can see like the Nasdaq 100, the Russell 2000, small caps, S&P 500, broad large caps. You have the equal weight, which takes away the effect of cap weightedness. Okay. And the mid caps. So you can see like the large caps right now are very overpriced compared to where they are usually. Okay, very overpriced. But welcome to the bubble land. We are in the bubble land for sure, and it will last longer than you probably can guess. Michael Burry can scream and yell and say like it's a bubble, it's a bubble. He's been saying it's a bubble for years now. Okay, he thought the market would really crash in 2022. It bounced right back up. We recovered in 2023. People were calling for recession in 2023. Didn't happen. Nothing happened. We kept going to 2024. Like how many times I've been hearing it? It just doesn't matter. A bubble can last longer than you really think it can last. Honestly, I've been here before. I've seen it. You just ride it. You just grit your teeth and go like, I got no choice. I got to follow where the money goes. That's it. Okay, want to know what's weird, interesting fact? Freight is most often stolen and considered high value. Oh, that's interesting. Really interesting, man. You see how much Red Bulls like Ruby and Jeremy and and, and Grace consume? Like, holy shit. I have a first cousin once removed that became a billionaire by moving from freight to oil to sports. Oh, yeah, that's cool. That's cool. Yeah, that's cool. You know, you gotta find the opportunities, right? You gotta just jump around and just make your money in something, and then once it's like played out, then you just jump to something else that looks cheap at the moment, and it goes. I think that's the fun. That's why I'm always have a good time with studying this markets and stuff, is because you try to anticipate. You try to anticipate where the things are gonna be. That's always the fun part, you know. Yeah. What signals? So one signal I always look at, you know, because I found out like there's multiple signals, but here let me find it. Hold on, I can't find it over there quickly enough. This is one signal that I really like that I found like some years ago. Um, and I really like this one. This one makes so much sense. I mentioned this on the show before. Here, I'll mention it again. This one. Okay. So this one is the margin debt growth. So if you go to FINRA and look up margin statistics, it shows you how big people's accounts are where they borrow money. So it shows you how much money is in their account that's borrowed. It's not their capital. It's what they borrowed from the brokerage to buy the stocks. So they can buy Apple using money from the bank, right? And that's why you get a margin call. Okay, if you know that movie Margin Call, so the 2007 crash, there's a good movie called Margin Call. That's what happened. That's why Lehman Brothers and Bear Stearns, all those guys collapsed because they got a margin call. They bought a bunch of loans, right? Bonds, mortgage-backed securities on that they borrowed money to buy. And then when the mortgage-backed securities started going down in value, the banks, the brokerages started calling them up and go like, "Yo, the value of your account is dropping, and if you don't come up with the collateral right now to maintain your account, we are going to forcefully close all your positions. We are going to liquidate all your positions." That's a margin call. So if you bought Apple, you bought Nvidia with borrowed money, and all of a sudden there's a huge crash, right? All of a sudden the market starts going down like crazy. And you can't call your cousin or your dad or your mom or your brother or somebody. You can call your drug dealer, be like, yo, can you give me a few thousand right now? I need to put it in my brokerage account before 3 p.m. Or they're gonna close all my accounts. What's gonna happen is that they're gonna liquidate all your Apple, all your Nvidia, everything. Okay, if you don't come up with that money right now, and that's what causes major crashes, because then they close all those Nvidia positions, Apple positions, then it goes more down, and then a lot of other people start getting margin calls. Then it just bubbles all over the place. Everyone gets margin calls, and they're all going like, "Oh shit!" That's what happens. So this one shows you the margin debt. Okay, and what happens is when people's margin debts, the rate of change of the margin debt goes down from a very high position. So during the COVID bubble, okay, when you had all that free money from the Fed, you had all that free money from PPP loans, stimulus checks, whatever, you could fund your account and you could get all these loaned money. Okay, the more money you put in, the more you can borrow because you need collateral, right? So I could put in 10K and then the bank would give me 30K or something, and I have like effectively 40K to buy stocks or options. And what happens was that somebody, okay, I'm guessing the real smart guys stopped buying margin. Okay, they started unwinding their positions and decreasing the amount of margin they had in their accounts. And so when you go up very high and then you start dropping from a very high position, I measure it with rate of change. So 15-month rate of change. I'm sorry for the blurry picture. This is the best quality picture I could get. Okay. But if you measure the rate of change, the 15-month rate of change, all right, if it goes up above like 48% and then it drops below 48%, okay, this is what happened in November of 2021. All right. If you remember, 2022 in January, the market made a top. So this was 2 months earlier. And then when you go from a very low position and then you go from the bottom here. So if you go below negative 21%, so very bearish. A lot of people had very little margin accounts now because they all got busted. All the bubble popped really nicely. And then it starts building back up. Then, people are coming back into the market and they're leveraging again. So a lot of this is also due to leverage, and that's what it is. Okay, a lot of it has to do with leverage. So yeah, you can go get this data. You can put it in your Excel. What's up, Quantum? And you can tell where the bubble will pop just by using this metric. So I think this is a very good metric, especially now when a lot of people are greedy and they get loans to buy stocks and options. So yeah, this is I think this is a good way to look at it. So you can go to FINRA. So let me get the website for you. You go to FINRA margin statistics. Here, I'll put the link in the chat. Yeah, I think the PE for the Mag 7 is very massive. I think a lot of people do not want to touch the Mag 7. They rather touch the next Mag whatever, which is like Broadcom and other stocks, okay? So, anyhow, this is the FINRA website, finra.org, and margin accounts, okay? So you can just go to Google and type in FINRA, FINRA, margin statistics, margin account. All right? So, that will be how you look at it. So you can use this signal. This is one way. I have others. All right. I've shown and I mentioned before. This is one that you can look at for sure. I think when you have this signal trigger, you have the Hindenburg Omen trigger, I need to have a lot of signals trigger for me all simultaneously. Then I know, yeah, this is a crash. This is going to be a big crash, and then I get out. Okay. It's not going to be one signal. You can't use one signal. You need multiple signals. So, and have this one as one of them. Okay. This one is a very good one, I think, especially in the post-COVID era. I think this one will be very important. You will see a lot of people start borrowing again when we lower interest rates. They'll be very happy. They will bubble everything up. They don't care. They'll buy anything with borrowed money. It's not their money, so they'll risk it, right? When you gamble with money that doesn't belong to you, how is your psychology going to be? A lot different. A lot different, right? So this is why people were doing stupid stuff during 2021. You had a lot of people buy what was that? The NFTs and Shibu Inu. Like what was that? That dog meme coin? Oh shit. Oh, GameStop? Yeah, of course, of course. Of course. Yeah, so that's how you know. But right now we're safe. We're okay. So I think this bubble has legs. Um, I think we're fine. I don't see anything wrong with the bond market so far. So we're all good. We're all cozy. Let's just ride the market as it is. But right now we need to find a dip though. All right, that's all we gotta find. This ain't the dip. This ain't the last Thursday in software. Yeah, it was an okay dip, but nothing I thought was like, yeah, I'm gonna buy some more outside of Adobe. I didn't see nothing really that exciting. Come on. Yeah. Come on. You gotta get me something better than that. Okay. All right. So here's another thing I've seen. I've been talking about the grain prices, right? Grain prices. I see soybean oil going up. It's been up like 40% right now, soybean oil. Soybeans, corn, and wheat haven't really gone that high, that much higher, but I think it will. So I don't know if this account is correct. I don't know if this is just fear mongering, but this guy says latest Roni forecast is flashing a serious warning. Models are now pointing towards a potentially historic El Nino event. Bro, how many times I've been hearing about the big El Nino? I've been waiting. I've been waiting for the big El Nino. Come on. I know India is very hot right now. It's like 110 degrees in India. Very hot, very humid, probably stinks like a mofo. Like, come on. But you got to give me some proof that we are entering a real good El Nino season. All right. Okay. I don't know. But if it is true, then this will help with the whole commodities inflation thing. Okay. So I really think are probably going to see some very bad, very bad inflation. Like, hold on here. Let me pull up this chart. Um, I sent da 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 da. Okay, let me see. Where did I put it? All right, here it is. Okay, this one. Okay, so if you look at the one that's going all the way to the right here, this is gold. Okay, if you remember, gold, I shift out 15 months ahead. This is how I did it with oil too. Oil is 19.8. So gold will tell you when oil goes up, when the grains, the wheat, the corn will go up. And then also interest rates will go up. Now, of course, we have a Federal Reserve that may fight against this, right? We may have an actual Federal Reserve that will not raise interest rates and will actually lower interest rates, and that will cause a great bubble. And perhaps this will also cause this food prices to go up even more insane. All right. Beef is already very high. Beef, they haven't restocked their cattle. I think they haven't they haven't made new baby cattle, so beef is gonna stay very high. All right. As far as like how that will affect the wheat prices and the soybeans, I know they feed pigs with like soybeans, and especially in China, they'll feed them really garbage grains just to get them going. So if we do global prices for soybeans, it's probably gonna be bad. Okay, it's probably going to go up very high, because Chinese love to eat pork. Okay, so that's the thing. One metric you can look at the Chinese economy. If you want to know how well the Chinese are doing, look at their pork. Okay, if pork demand is going up, that means the Chinese are doing well. If pork demand is going down, that means the Chinese are not doing well. They eat a lot of pork. Okay, so there we go. Yeah, it stinks at any temperature. Rice in America is getting noisy in Delta area, needing more cap. Okay, interesting. I know like the fertilizer and the diesel prices, they've been screaming about that already. So yeah. Shibu Emu. Oh, okay. Okay. Yeah, 20, yeah, Shibu Emu. Yeah, Shibu Inu. Okay, like PE 20, 27, 28. Yeah. I mean, that might be okay, right? Like that's normal for Mag 7, I think. But I don't know. If people are starting to look at other stocks in other areas that they might not really want to bite anymore. We'll see on Wednesday for sure. I think consumers are still eating last year's harvest. Oh, yeah, that's true. Some people are saying next year we're doomed due to Iran war and halted supply chain. I think natural gas prices will hurt because it's needed to make ammonia. The third world will suffer the most, right? They require heavy manipulation of their crops to have high yields. Their populations are huge. The U.S. is always so safe with like the Great Plains. We can eat corn forever and we'll be fine. Like we could just be like, well, if worst comes to worst, we'll just eat corn all day. Like, that's about it. Yeah. So I don't see a problem honestly for the U.S. For everybody else. Yeah, that's gonna be a problem. Definitely. This is one of the biggest strengths of the United States is the Mississippi basin. Uh, it's just so easy to move crop through the rivers, and so transportation is generally cheap. We have lots of natural gas, and U.S. natural gas prices are still fine. They're not they're not crazy, okay, like the Europeans. Um, and I have no clue how the other countries are going to get their natural gas because they need the natural gas to mix with to make ammonia, right? To make their fertilizer. So that's going to be a problem for them. Yeah, we already do corn and everything. Well, you're going to have to enjoy more corn. You'll have to enjoy more corn. I mean, I guess Idaho still is not going to be affected, so you can have plenty of potatoes from Idaho. Anyhow, yeah. So, but that's a year away. But I think yeah, we have to start looking at corn, wheat, and soy. So the ETF TILL is probably going to be good into next year, according to this. We'll be going high until July of 2027, at least. At least that's just the basic timing we have right now based on this. And there's also a ratio you can use, like gold divided by gold divided by wheat. Okay, that's another ratio some people use. Let me see here. Gold divided by wheat. So here's the gold divided by wheat ratio. So do people want to overpay for gold or overpay for wheat? It looks like we peaked out on how much people are willing to overpay for gold. Makes sense. I think a lot of people have already been building a lot of gold positions since 2021 and before. And then nobody really significant is going to buy a lot of it in 2026 now that oil has already spiked. So everybody's probably going to shift into wheat now. They're probably going to overspend for food. And that's going to go into July 2027. Perfect. So I think all these cycles are aligning. So I see the grains going up into 2027. So I'm going to have to look at the fertilizer stocks again. I told you guys the two stocks I like 2 months ago by now, maybe a month and a half. CF was my first one that I liked. And then I also liked IPI is my second choice now. Those are my two choices. I have other stocks I'm looking at, but those are my two choices right now. CF and IPI. Okay, so that's it. Those are the two to get. All right. All right. Okay. Sure you get all that. All right. Good. Okay, that's it. That's all I need to say about that. All right, good. So we'll be looking at that one. Okay, let's look back at the market right now. See how that's doing. I don't think anything's changed. Yeah, we just slammed down in the morning and nothing's changed yet. Yeah, so nothing. Okay. All right. Till. Okay. I see some volume coming in here. That's definitely so I'll have to see. I think you could yeah, you know what? I don't think it's gonna go any lower than 17.5 based on this. I think you're fine. If you really want to get in now, buying this one at 18 is pretty good. The problem with PDBA, it has too much other stuff like cocoa. Yeah, I don't know. I don't like this has too much other things in it. I think it does it have beef too? I think it has some lean hogs. I don't know. I think it has some animal products in PDBA. I don't know if I want those right now. I think for me, I just want to look at the grains. The only problem with TILL, it has sugar. I don't think sugar is gonna do well compared to the others. So that might drag this thing down. It's already been dragging this thing down, honestly. The only reason it's been like this is because it isn't going up. And then CF, okay, CF is the chemical company. I think you want to buy for fertilizer. So yeah, just look at CF. Let me see. Let's look at the weekly. Yeah, I think it's good. So anything close to like 110, I would get. I think it'll be fine. I don't think it's gonna go below this one. IPI looks still good. Okay, yeah, this one at 35 ish, good. Okay, IPI. I don't see anything else about it that where I would be too worried. It's already pulled back, so I think it's safe. What do you think Intel go price wise? Intel's probably gonna go down now. I don't think it's just I think this is crazy. Like if you yeah, it's gonna have to go down. It's 23% 1 week, 16 another yeah, 20 no. No. We have to retest 60 again sometime down the line. Yeah. So yeah, that's not there's no rush. There's no rush for this one. So if you got it at 20, you're okay. I don't really care. I mean, I don't think you would really care, unless you really feel like you need to sell. But it's definitely gonna have to retest 60. But for anybody else that wants to wait, you're gonna have to wait a while, right? Because the bubble is gonna keep this thing dancing. My guess is this: it's gonna be like it goes down back to 60. It's gonna zigzag between 60 and 70, 60 and 70, or maybe it'll drop a little bit more to 50. So it goes to, and then it'll like go between 50 and 70, 50 and 70 again. That's probably what's gonna happen. Um, make a move to 90. Okay, so that's my guess. So let me draw it like this. That's probably it's gonna do. So we're gonna have to wait for the semiconductors to pull back. But I think when they do pull back, that's what's gonna happen to Intel. Let's see. No, I don't want that. Oh, let me just draw it with this. Okay. All right. Like something like this, huh? This. Yeah. And then wait, I can draw multipath. What the heck, the multipath? Multipath. Yeah, okay. So that's the first move, and then I think it's gonna zigzag like this. It's gonna do this all the way into here. Then we can go back up. You get what I mean? Okay, and then we're gonna go to 90 something. That's probably what's gonna happen. Okay, yeah, something like that. Yeah, something like that. Something like this. Yeah. Okay, 90 something to 100 something. So yeah, that's what I think is gonna happen. So you could just say that's what's gonna happen. Yeah. AMD. Yeah, AMD's just been chasing Intel right now. Same thing with Qualcomm. Actually, if you look at Qualcomm, this is what's gonna be curious to me because Qualcomm is not a good semiconductor performer overall. You see, right? From April last year into October, that was the high, and then it went back to the April lows. If you look at Marvell, same thing, right? Marvell was not doing good either. Like Marvell, you had the April lows, and then you got stuck uh, dipping around 86, going around 86, going around 86. Only recently, from the March earnings, we started getting a little pump, and then when we had our taco, it just rallied, right? So we're gonna have to wait for this next earnings, and we're gonna see what's gonna happen. But my guess is that maybe this went over its skis. It's way over its skis. And once earnings happen, it's going to drop back to 100, 115, somewhere around this last area here. And it's just going to zigzag, 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 zigzag. Or maybe it could be really bad. It could be really bad earnings and go back down to 80, 88. I don't know, right? It really depends. But Qualcomm and Marvell, they've been trying to play catch up, for real. Now, if we look at AMD though, AMD kind of like got trapped here at the 233 because this was the old high in March of 2024, and it's been really underperforming since 2024. Really, like out of all the other ones, like compared to Intel. No, actually, Intel's probably still did worse than AMD. But overall, yeah, it's if you look at the other semis, this didn't do very well, right? In 2024, it tried to play catch up, got kind of stuck into September, but then it had news, right? It had some news. I forgot what the news was, but it had some news. It popped up that day in October, and then it's just got trapped. We kind of have been dancing in this 223, 225 area before this final blow up. So again, this one, it's been playing catch up, right? It's been playing catch up in the valuations. So I think it probably will just go back towards 250 again, depending on the earnings. And then we'll see how it goes after. So I think all this stuff is kind of like the first impulse. Everything has their first impulse. AMD, Qualcomm, and Marvell. Look at them. Look at them. They haven't been going up very consistently. Like I told this this friend of mine, like his boomer brother, likes to buy thousands of shares of companies. He doesn't like to. He just buys and holds, doesn't look at it. He only buys like a few stocks, and he like 3-4 years ago, he asked me what he should buy, and I told him Broadcom. Like, I could have told him Nvidia, I guess, but Nvidia is kind of too volatile, so I thought maybe he would get scared, right? Because it kind of like moves zigzags very violently. But Broadcom overall, it's a lot more tame. Okay, like if you look at 2022, look at the bear market in 2022. So if he bought in around here, let's say he bought at the peak of 2021, and Avago's it used to be called Avago. I keep calling it Avago because that's what the company used to be. Broadcom bought Avago, but it kept the ticker symbol AVGO. I don't know why it did that. So Avago bought Broadcom. It changed its name to Broadcom, but kept the ticker symbol to AVGO. Okay, that's the story. My bad. But if you look at this, um, okay, let me see. Blah blah. Where is it? This thing. It's very mild, right? The way it dropped in 2022, very mild, very safe. A boomer wouldn't get scared. So even if he bought here and he's losing money in 2022, he wouldn't sell. Like, if I told him to buy Nvidia, let's see, this looks way scarier, right? Like, let's say he bought at the worst time in 2021. Like, he bought at $30 and it went down to 15. That's, dude, 11. Dude, that's like 60%, 70% loss, right? And you're just like, what the fuck? And you sold right at the low. Like, this is why psychology really matters, because I kind of have to know how you think before I recommend a stock. If I think you're scared, but you want a good semiconductor AI stock, it's Broadcom, because the CEO is very good. The company is very broad, right? It's not like Nvidia, not concentrated in GPUs. Broadcom has many, many semiconductor businesses running together, so it doesn't get punished as bad. It doesn't grow as good as Nvidia, but it's not going to get punished in a bear market. So in this time during a correction, look at it. It's like, so it went from 66. Let's say you did the worst thing and you bought it at the high at 66 in 2021. It just went down to 44. Yeah, it's bad, but it's not like Nvidia, right? You wouldn't get scared to sell. So you kind of have to look at that this way. And Broadcom, very stable, very stable. It's not very sexy, okay, I get it, but it's pretty stable, pretty stable. So looking at Broadcom is a good metric of how you think everything is going to go. All right. Very good CEO, a Singapore CEO, I believe. Lip Bu Tan, who runs Intel right now, is a Singapore CEO. So yeah, there are certain CEOs. When I look at tech companies, I mainly look at CEOs, how they lead a company. So if you want something stable, uh, it's Broadcom, probably. This thing will survive. This thing will always survive. It doesn't matter what it is, it will survive. It doesn't run on one thing. So if you need something where you're exposed to a lot of different semiconductor sectors and industries, yeah, Broadcom is probably the place to be. Okay, a lot better than Marvell. I remember a friend tried to get me to get into Marvell because Marvell bought his company and then they needed new people and they wanted me to join their team. Like Marvell, and there was another person that wanted to join their team too. Marvell is an insane company. It's just like, what the fuck? Like, you could tell by its stock. The way it just chases things, it's like it doesn't know how to make money consistently. It's just always chasing a fad. That's Marvell. That's Marvell for you. That's the Marvell way. Marvell likes to chase fads. Let's put it that way. Okay, what if I'm scared because I have real debts to cover, but willing to learn, and hundreds of dollars scare me at this point? Just learning first and keep slow growers. Yeah, just keep slow growers. Yeah, you don't need to jump into and do too much risk. And you can just watch and see how I approach things. Different stocks have different ways. I think like you sticking with natural gas, oil companies So we're gonna get back into those in July. Also, utility companies. I'm looking at NEE. NEE will be the next one. I've been looking at some other ones. I like what I'm seeing. NEE, Enphase, ENPH. Um, those two. All right. So in phase, yeah. So this one's kind of like making a bottom here. NEE is kind of like gonna make new highs. So yeah, we got new stocks coming. This one already had earnings. Okay, let's see where it pulls back. I'm gonna wait and see where it pulls back and see where it goes. So these might be the ones you take a little bit more risk on. These utility stocks. Okay, and then we'll see how what else we gotta do. Yeah. Yep. I think it's yeah, so somebody asked me about this before. I think he's fine. He's a hardware guy. It's going to keep the same type of tempo for Apple. Maybe you guys think it's a good or bad thing depending on how you think Apple did its AI. I know there's a lot of criticism about how Apple did AI, right? They're too slow. They wasted a lot of time with Siri. They didn't know what to do about how to take advantage of the new technologies that were coming out and compete when ChatGPT came around. The thing about it, though, is like Apple likes to keep their ecosystem closed, you know? And whatever you might hate about Apple, like for normies, Apple is really good because they keep everything in a closed box. So people who don't know tech, they make it easy for you. That Apple's always been like that. That was always the thing about Apple's philosophy. It's like this is for the normal person who doesn't like tech, and we just lock it up, and that keeps itself making money too. Because once you get sucked into the Apple ecosystem, you can't leave. You're like, oh shit, I use iCloud, I use iTunes, I use iTV. It's like it's just like so well integrated. Like you have a hard time escaping them. So that keeps a lot of customers really loyal. So that has that. But then the bad part about it is that they don't go experiment with things too far out of their lane. And that because they get another CEO that's the same way of thinking, because it's another hardware guy. It's from the hardware group. Okay. They selected a CEO from the hardware side. Again, Apple still thinks of itself as a hardware company. If Apple still thinks of itself as a hardware company, it wants to be a hardware company, then guess what? The Apple stock is not going to be sexy, right? It's really not going to be like really a like the only hardware companies that are sexy is like what? Nvidia, right? And Micron and now Intel, I guess. But like generally they're not. People always want to jump into some kind of software. So Apple is not a semiconductor company. It uses semiconductors to build stuff for the consumer. So it's a consumer facing company. But how does it grow, right? That's always going to be a challenge. Right now, it doesn't really grow. It just makes a lot of money on charging people an arm and a leg for Apple Care or something. Like Apple Care, like $50 a month, please. Oh, you want iTunes? Yeah. We're gonna charge you like $2 extra for that song, and we're gonna pocket that. And then you go to the App Store, and then you charge all the developers. Well, we're gonna take like a 10%, 20% cut of whatever you get from how many apps you sold on the store. That's just how they make money now, and that's just how it's gonna be. It's not gonna be high growth, honestly, right? Until they do something amazing, and I don't see that happening. And maybe Apple shouldn't have to do that. Apple is fine what it does, as long as they keep all their customers happy and they keep charging what they charge and keep raising the costs of things, and people still stay loyal customers of Apple. Then there's no problem. It's just going to be a boring stock, and that's okay. That's okay. There's nothing wrong with being a boring stock. That's okay. It's not going to be like when I bought it in the 90s, right? It's not going to be that excitement, to have that same excitement anymore. That's okay. That's fine. It's good. I'm surprised all the people that think using Apple is weird on YouTube. Oh, yeah, there's a lot of haters. Oh, there's a lot of haters. Yeah, because like, yeah, there's always gonna be haters. There's haters everywhere. I mean, I understand the market that Apple caters to. There's no problem with that. I get it. I get it. I mean, and I do have complaints, like the thunder, like what is there, lightning cables, or what was that, the thunder cable? What was that cable? The EU was like forcing them to use USB-C, which is right. I think, yeah. There's once Intel made USB-C, it's like, bro, there was no reason for you to keep using the stupid thunder lightning cable, whatever the heck it was. Yeah. It just works herder. Yeah, yeah, yeah. A lot of people there. Lightning bolt or whatever. Yeah. It was something. Yeah. It was bad. That connector sucks so bad too. 5 gigs of free iCloud. Yeah, I guess this this is fine. So yeah, so Apple knows what it's doing. It's going to continue doing what it's doing. But if you're expecting explosive growth, Apple is not the stock for you. This is not the 90s. All right. Yeah. Yeah. So yeah, I still have old legacy hardware that still has that lightning crap. Yeah. So I got C, I got Lightning, I got all kinds of adapters. I didn't pay for those adapters though. People just gave it to me for free. People that just stopped using the old versions of phones and things. Yeah, but I have them just in case I need them. I have a whole bucket full of adapters. It's really annoying, but hey, you never know when you need it. Otherwise, I gotta hoard all that stuff. Oh my god. Okay. All right, that's good. Anything else? Anything else? I got to talk. I'll come back later tonight, maybe, or tomorrow morning, and we'll discuss other things because I was looking over all the charts and I didn't find anything where I go like, oh yeah, I'm gonna recommend people buy certain stocks. It's just no, man. Outside of Adobe, I was like, Adobe made a nice bottom, right, on Thursday, but it's just like, bro, come on. So this one was, let's see. Yeah, it made a nice bottom here, but it's like outside of that, like let's look at now. No, 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 no. I'm not getting that. Microsoft, we got earnings, so can't do nothing about that. Gotta wait for that. Oracle looks like it wants to drop some more, so I gotta wait. So maybe 161, but I don't know. So that's what I gotta be working on. I gotta really plan it out for Wednesday, because once Wednesday hits, if we do drop Wednesday afternoon after the close, then Thursday is when we're gonna be looking to buy. Thursday and Friday, okay, looking to buy. But if it drops really hard on Thursday, you know what? You know what? Then we can wait. We can wait till next week. There's no rush. It can go pretty fast. Yeah, there's a lot of volume here, huh? On that Thursday. So I don't know what that means though. And if I look at Bitcoin, how's Bitcoin doing? Yeah, Bitcoin, it failed. Yeah, it failed. I was watching this whole thing. I was like, okay, we got this nice range from Tuesday last week. And then it was like, yep, we're gonna go higher. And it was like Sunday, right? Sunday to Monday, Sunday night to Monday morning. And then once the market opened, nope, sorry. So the cycle analysis, I showed that like Bitcoin will probably try to make an attempt to go up starting March 4th, or May 4th into May 11th. So beginning of May to mid-May, I'll be looking at it. But it looks like, yeah, this is confirmed. I don't think we're going to go higher unless Wednesday surprises me, but I don't think so. This probably means that like we're going to retest. We're going to have to retest 72,000 again, 71,000, 72,000 again. So no rush. There's no rush to buy HUT. Okay. We need to look at this to buy HUT. No rush to buy HUT. Okay. No rush to buy HUT. No rush to buy IREN. See what IREN is doing. Nope. Somebody tried to push it up last Thursday, but it gave it all back. That's what I thought. And then Corzi. Okay. Yeah, Corzi's still dancing here. Okay, so nothing really going on. All right, so I think we gotta be patient. So we're gonna be patient. No problem. Okay, I think that's good. It's definitely highly correlated to IGV. IGV is highly correlated to it. So IGV and Bitcoin really match up. They sync up a lot. So software, select software anyway, and Bitcoin highly correlated. Highly correlated. So if I see that, I'm not really in the mood to be buying some Oracle again, whatever. This was a good trade, okay, from that bottom up here, but I can wait for it to complete its dip. I don't think Thursday was the real dip, I guess. And if Intel really crapped the Nasdaq, we probably would have gotten to the point where we could buy this stuff again, but it didn't, right? Intel semiconductors, it just keeps holding everybody afloat. And yeah, that's kind of like bleh. Come on. This ain't it. This ain't it. Yeah. Adobe's fine. Yeah, Adobe I think is fine. I think it's been beat up too much already. Doesn't mean I think it's a good company or not. Actually, like my parents kind of are one neighborhood over from where Adobe's one of I don't know if it's a headquarters of Adobe's. It might be. I'm not sure, but yeah, they have a lot of buildings around near the ballpark in San Francisco. You know, the Giants. It was AT&T, and then it became AT&T, and then it became what, Oracle? I forgot. They changed it. So I haven't kept up with how many changes they made the name of that field. It might be Oracle Field as far as I know, but like, yeah, it's right by there. The whole Adobe campus. It's like there's like 2-3 campuses around that area. Yeah. What else? Okay, good. All right, I think I covered what I need to cover. Shoot. Was there any little video I wanted to play for you guys before we leave here? Any video? Let me see if there was a video. Okay. Okay, let's see. Nope, I played that. Okay, I think we covered a lot of stuff already. Nope, played that. Yeah, I think we're good. Okay. Maybe I'll play these 2 videos. I think this is interesting stuff. Claude, Mog, Adobe, and Figma recently. Yeah, I heard. Yeah, Figma. Yeah, I haven't looked at Figma actually. Isn't it Figma a recent IPO too? I think it is. It was. Yeah, I think it was recent. Relative. Yeah, it's recent. Definitely. Yeah, Figma's trash. Oh my god, look at this chart. Yeah. That's why I ignored it. Yeah. No way. Oof. Ugly chart. No, it has no bottom. Forget that stock. Forget that stock. Oof. Ugly. Wow. Oh, Adobe acquired Figma and then back. Okay. Is that what happened? Wow, software companies are so weird, man. They're so weird. Working in the software industry is like, yeah, something else completely. Hardware is so slow. You know, people are so chill. Unless you work in Nvidia, right? Outside of like Nvidia and Apple too, can be a very high pressured. A lot of people that I worked for in my old companies, they went on to Apple. The pay is not necessarily much higher, but the benefits are very good. So if you had a family and you wanted to start a family, most people they ran to Apple because the benefits were so much better. But I didn't care about having a family, so that's why I stayed with like crappy companies. Working in a small mid-sized company was fine for me. You know, it's low pressure. You have a lot more power. You know, you don't need to have to do too much office politics to mess around. But when you go to a bigger company like Apple and Nvidia. It's like, or Marvell. Marvell is even like is very is pretty big, fairly big. It's not as big as Broadcom, but it was fairly big at that time too. So, but still, hardware is still chill. Like software people are a whole nother breed. They're crazy. They're all manic. They're always looking for the next hot thing and stuff. All right, let me play this video here. The American Nightmare.
You get a job in IT. What's your plan?
The last option, if I will not get a job, like even I also find a girl on the dating places.
Any nice Indian
The
girls?
fucking dream.
No, not an Indian girls.
Who?
One white and one Mexican. And the white women, they are not like a greedy. Some of them like a greedy, but everyone not is greedy. But in Mexicans, you cannot trust them.
What have you seen?
Not trust
What have they done to you?
What did they do
One
to
of
you?
my friends, sorry. So he's just thinking to what to
Yeah.
do, and he's trying to get a jobs and a lot of things. After that, all the hard working, he's not getting a job. So
Right.
he find a girl. So first my friend said, "Oh, I like you. Can I
Right.
get your number or something?"
Yeah.
Okay.
And then they went for the dates and everything. My
That's good.
friend, he said to that Mexican girls, "Oh, can I ask you for the favor? It's not only my favor, it's your too. Why? Because you are struggling hard, so it's really good for you too. So can we do like a marriage just to fix my papers?"
Sure.
So she said, "Yeah, okay then."
Did they get married?
Yeah, they get married, and the thing is that after
What?
they're getting married, and she said, "I have some conditions.
Uh-huh.
Like when she's going to sign the papers, she wants like $5,000 in her first month."
Based Latinos. I gotta say it. That's smart.
And this is a torta. Oh shit.
Oh shit.
And after that, she is telling.
I love
like,
how he
this
knew
is
what it
my
was
first
too.
thing. This is my first condition, and now listen my second condition. Every month you have to pay me like on the payments, like every month $1,000. After that, in additional
$1,000.
to you have to pay some of my rent, some of my bills.
So it's like a real marriage now.
Yeah, but she don't want to sleep with my friend.
And she doesn't want to have sex.
Yeah.
Dude. This is outrageous.
No, she don't want anything.
Oh, she just wants the money.
Just want money. Even
She
my
just wants
after
the money.
They got married.
Yeah.
At the time, he already gave $5,000 to her.
He's really living the American dream, huh?
After she receiving $5,000, she's like disappear. She's
Oh,
not
yeah.
responding. She's not receiving the calls and everything.
Right.
She's just ignoring him. When she needs the money, when she gets a time for her payments, she's cutting. "Oh, where are you?" He asks for the money. Where
Wow.
is my payment for this month? I'm doing your work from last 2 days and you're not paying for me. When she got her money for the payments, for the first payment month, then she
disappeared
did
again?
the same thing.
She'll come back the next month for more money. And this friend, this isn't about you?
The thing,
You're not the friend, right?
No. No.
I'm the person.
You.
It was me all along. Wow.
You are?
Yeah.
I'm sorry. This happened to you.
Man.
I heard I did a lot of hard work, like 8 to 9 months to get that money, and the beach she took in 2 months.
How is it being an Indian in 2026 here in Texas?
Well, he's living the American nightmare now. So you're married to a foreign wife that doesn't love you, won't have sex with you, and only interacts with you for money. All right, well, it's a different kind of American dream.
They are thinking like they are seeing us like they are thinking, "Oh, Indians, you are Indians. You are not our category. You just be aside." One homeless came to my store, and he's telling me like he's asking me, "Oh, can I get the lighter?" I said, "Okay, you have to pay for that lighter." But he's telling me like, "This is my country." I'm just fed up with these things.
Really?
Yeah, from only just from 2 months. What I say.
You ruined the whole
Yeah,
experience.
all the things, all the dreams.
Yeah.
so the reason I played that was because we have to we're coming into the 250th day of the United States, right? 250th birthday. And I mean, the Roman Empire lasted quite a long time. I don't know if the US Empire will last that long, but during the late Roman Empire, you started seeing a lot of things like scams. Scams were a big thing in the late Roman Empire. Okay, so you can read here. This is the the Google AI answer here. Scams in the late Roman Empire were rampant and varied, ranging from sophisticated tax evasion and financial fraud to daily consumer scams like forged documents, adulterated wine, and counterfeit currency. Tax dodging often involved falsifying slave sales or creating straw man partnerships. Consumer fraud was widespread, with cheap wine dyed or mixed with toxic lead and counterfeit precious jewels sold by street sellers. Oh my God. Water fraud, huh? Property owners in places like Constantinople often manipulated water lines to avoid paying for the true amount of water used in their homes and baths. Oh shit. Oh, yeah. So if you remember about the whole Minnesota Somali Medicare, Medicaid, whatever scam, I think you'll see more and more of this as a norm. So Universal Jones had a short stream a while back. I wanted to play it, but I didn't get the chance. So let me see if I got a little time. We can play a little bit of it. Okay. So let me see. Come on. Go. Go. All right. Let's see. So we can play a little bit of it. So check out Universal Jones's channel. All right, at Be Better Network.
You're tuned to the Universal Jones Show, where wisdom meets work and faith rewrites the code.
All right, it's pretty long. His intro is pretty long. Let me get to the. Let me get to
Universal Jones. Brandon Jones. That's the government name. We're gonna change that to Universal.
All right, so yeah, that's Universal Jones. Go to the Be Better Network. All right, we got a merch store. I hope he continues this series because he's in the healthcare area, so he knows. He has you can see it on the ground how things are going now that they starting to go like whoopsie, we got a lot of fraud here. So yeah. My son was invited to the Renaissance Pirate Weekend by a girl and is looking for a costume. And I was like, I don't know, what do the Somalis wear? Yeah, anyhow. You left Walmart marketing team for that reason. Company culture is so important, right? Company culture is like the whole dynamics of it. Man, sometimes pay is not worth it. Sometimes pay is not worth it.
So, whoops. And I can't spell. But greetings. I don't expect to be here long. And also, I do not expect to have a big audience for this quick stream because CT is back and he's got heavy hitters on the panel as I speak. But I seen this news clip and I wanted to react to it while I had a little bit of time. I got about 20 minutes before I hit a meeting and continue on with my work day. But I ran into a clip that I think is going to prove something that I've said months ago on John Galt's channel and some other channels that I've been on more recently about the Minnesota fraud thing. And I know people are making jokes and they're hitting Somalians or Somalis, however you want to term it. I know people talked about daycare centers, but I made some points months ago when all this fraud stuff was rolling out that the number is bigger than what people were saying. I think at that time it was like $9 billion. And I said it's probably closer to about 21 million. It might even be more than that, because at that point they were only looking at like daycare centers. They weren't looking at chiropractic services. They weren't looking at adult daycare centers. They weren't looking at these other like foster care things, at these other places and spaces that I know Somali folks run businesses out of. And I know it wasn't just Somali folks that were finessing these billing companies. Why does this matter to me? Because this is part of my line of business and work, and it has affected me pretty significantly, if I'm being completely transparent and honest. I've been in the social service nonprofit world for, man, I mean, it's been, I mean, I'm about to hit 15 years now or more in this space. I've been in the mental health world for about the same amount of time. And I've carried a consulting business for quite some time. So in this space, and one of the ways that I make money as a consultant is by working with companies and organizations doing various different things, right? And one of the ways that I get paid for this is that these organizations or schools or companies, they have additional dollars, right? They have training dollars, they have dollars for consultants to fix problems, stuff like that. And I've been one of those people who come in and do those things. I come in and I fix those things. And what has taken place is, since all this fraud has kicked off, is that it has affected my business pretty much, where I can't make as much as I normally would. So usually around this time, you know, I'm pretty much booked out till October around this time. You know, I've made a pretty significant chunk of change. I kind of can project and predict where my finances are going to be typically around this time, as far as like side business stuff. But man, this year has been like a 35-40% difference in like how much money I can make, which is very fascinating. Now, I'm not broke. I'm not running into too many issues, but it has been something that I've noticed, like, shit, like my side business is taking a hit, because a lot of nonprofits and social services have they pulled back on those additional dollars. They don't have the dollars like they used to. Some of that's also due to the pandemic. And during the pandemic, there was a lot of what's called surplus dollars, and these organizations and these companies had additional dollars to spend on folks like myself to come in and do all these things. But now that money is not there either. So, you know, this was going to happen anyway. And a lot of people were going to be affected by this, but I don't think people expected it to be a fraud thing that brought in additional pieces. I'm going to stop talking there. I'm going to bring in the clip to react to. I haven't watched this clip yet. I just seen it posted. I'm like, and I know the reporter, and she does a pretty thorough job. So I know they're going to be uncovering some things that I probably have seen, but haven't seen the news coverage just yet. So we're going to check that out now. So I'm gonna go ahead and share my screen, and we're going to get into this clip. And again, I'm not going to be here for very long. This is more of a live that's really more for people to watch later, not for people to respond to right now. But here are the new Minnesota fraud numbers that are coming out. So let's check out the clip.
Welcome to Breaking the News Plus on this Monday night. I'm Janice Shortle. We're going to talk about fraud again with Lou Ragoose, but we're going to give you a peek behind the curtain into how he gets some of his facts. And these facts we're going to talk about today, Lou, have to do with all the money paid to these 14 high-risk programs by the state of Minnesota. And I want to go back and tell folks, you asked for this information you're about to share with us on December 18th of 2025.
Yes.
It's taken about 4 months to get it
through Minnesota's data practices law.
Yeah, this is how actual journalists do it. You request the data, takes time to get it back, but you need that data to show you, the viewer, where your proof comes from.
And so you mentioned the December 18th. That was when Joe Thompson, the acting U.S. attorney, got up and gave a press conference where he said that these 14 high risk for fraud programs that receive Medicare or pay out Medicaid reimbursements totaled in payments $18 billion since 2018.
Okay.
And then he estimated that up to half of that could be fraud.
And that number is important because this specific press conference on December 18th, when Joe Thompson.
So that's where I got that $9 billion number that I mentioned earlier, was from this press conference that took place in December, where they said about half of the money that they uncovered was probably fraud dollars, which is insane. We're talking billions and billions of dollars. And when I heard that, I'm like, hold on, it can't be 9 billion. It has to be more than that because they weren't looking at all the businesses. Let's get into it.
Thompson gave that 18 billion number and then that 9 billion number. Everybody from local influencers, national influencers to the president started to use numbers from that press conference to kind of suit their political motivations.
Right.
But you've been looking at the actual data.
I'm not politically motivated in this. I am financially motivated. I want the money too. I don't want the fraud. But again, this affects one of my lines of finance. This is one of my business ventures. And it sucks. I don't like it. I don't like the fraud. Just messed it up, man. That's not one of my streams of income.
Yes.
So now what can you tell us based on what we know right now with that data?
Okay. So since then, 2025's billing has been a little more finalized and the number has actually grown. So it's not 18 billion, it's actually 20 billion.
I was right. I have not watched this video. I told people I was on John Galt's. I wish I had the clip. This was damn near a year ago. I said it's more than $9 billion. No, it's not. It was like 6 months ago. I said it's more than $9 billion, people. It's probably over 20. Check it out.
Billion.
Okay.
According to this real data, the real numbers from the Department of Human Services.
20 billion is what we have paid in total
Yes.
to fraudsters and real people
Yep. It
since
includes
2018.
both. And that's impossible for us to say what percentage of that is fraud, but we can show you how it grew.
Most of it's fraud. Trust.
And that is where they are looking at red flags for
Sure.
fraud. So for example, here is the graph, which is all 14 programs combined. In 2025,
Oh, by the way, this is the other part of the conversation. They're only looking at 14 programs. That's a lot of money for 14 programs, people. They're only looking at 14 programs. There's more than 14 programs, and there's other industries of billing. This number is so massive. This is huge. And again, I don't think this is just the Minnesota problem. I think other states need to do the same type of audit to figure this thing out. This is bad. This is bad.
Minnesota paid $4.32 billion to these 14 high-risk programs. That is more than twice as much as it paid in 2021 when it was $2.06 billion.
Okay.
So is it realistic that more than twice as many legitimate services were rendered in 2025 than were in 2021?
Now, why is that? What did I say earlier? And I said this. During the pandemic, we've seen a huge uptick in services. She said, I've been all over YouTube today. Well, thank you for being here, Ruby. I appreciate you. I'm looking forward to connecting and doing an interview and talk some Boyd with you at some point. I might pull up to Celebrity Sunday if you have one this Sunday. I'll be available. But yeah, so why has it doubled in 4 years? The pandemic did something to a lot of industries. It made things a lot more relaxed. Even if you look at like how people dress for work, they're more athleisure clothing for jobs that used to like wear button-up shirts. Like I have one right now. People are much more relaxed than they've ever been because a lot of our society became more relaxed. We became more relaxed in how we look at things, how we look at rules and regulations, standards and stipulations. We've gotten to a space where we've just kind of been really easy on things. And the pandemic did that because it was like, hey, we have this crisis going on in our society. Let's give people a break and let's go ahead and let's allow for things to just kind of exist and let people figure out how to navigate life. Well, the pandemic is over and those standards have not gone back to where they were. People got very comfortable. Look at remote working. Look at remote learning. I am involved with this school, and we made a decision a year ago. Actually, damn, it wasn't even a year ago. That was back in July of 25 to go completely remote. We cut the in-person classes are going to be done at the end of this spring semester, and starting this summer, the school is going to be fully remote, which is crazy because the school that I'm a part of just bought a building not even 10 years ago, like $1 million they sold a building and bought another one, and they're about to go fully remote already. This is going to be this is insane. And so that's why you see this doubling, because things got more lax. There's a lot less regulations and restrictions over stuff. So people are just billing out the wazoo, man. They're like, hey, they're not going to be checking this. Let me add on these additional codes and services to get paid as much money as I can. It's insane. But let's get back to the clip because I'm running out of time.
One, it's probably not realistic.
Correct.
But how much of that jump is fraudulent and how much is legitimate? That's something for investigators to figure out. But just looking at this, you can see how it was pretty steady for a number of years, and all of a sudden, boom, incremental, exponential growth.
Yep.
Really, since the pandemic.
They noticed, oh, let's throw in a little extra here, a little extra there. These people aren't checking. Let's keep throwing extra in there, and boop, that money went through the roof. And I'm going to repeat this. They're only, in this fraud report, they're only looking at 14 organizations. There are so many more than that. There's probably like 60. This is insane.
All right, I'll play that much of it. You can see the rest on the Be Better Network. Okay, anyone remote working at a major corporation, tell me who you are, please. I don't see it. I worked remote 17 years. You know, before the pandemic, yeah, I was one of those guys who worked remote because, you know, I made sure everything was networked up. I could like do things from my house remotely. You know, I could read the instrumentation data, so all the oscilloscopes, the meters, everything were locked into the the local intranet, and I would just log in through a terminal, be like SSH or whatever in, right, VNC, yeah, or remote desktop, and I just remote in, you know, and I would track other people's work too. I could look at what they're doing. I could like monitor them. He's like, okay, this guy's just goofing off playing solitaire or this. I'll be spying on people. Yeah, that's how I did, so I could get away with it. But in general, I don't think people, I don't know, they kind of want you to show up, but not, you don't really need to if you have a pretty chill boss. You know, if they knew you were doing what you needed to do, it was really kind of like that. So I can't explain it for other companies how they would fare if you had another boss. It probably wouldn't fly, but I got away with it. And had I known that like COVID-19 was going to happen, I probably would have stuck it out. I would have stuck it out for another year into the pandemic, right? But I left pretty much in late 2018 because during that time, like Trump was going to increase his sanctions of a lot of Chinese companies. A lot of the customers we had were from China at that point. The only way we could grow as a company was to sell to a lot of data centers in China. And I read the, you know, I could read the room at that time. It was just like, well, Trump's making it hard to grow now for this company. And I have a feeling we're going to get cut sometime down the line because we just recently got bought out by a bigger company. And I could tell, like, well, with all this trouble, we weren't going to last very long. They were going to look for ways to cut costs. And we were a pretty expensive option to build certain chips. There were definitely cheaper ways to do certain things. And I knew like competitors, like Marvell was one competitor for sure. There were other ones. And I would just be like, nah, I don't think we can compete with these other guys because these other guys are offering cheaper solutions and they're going for other markets that are not in China. So I don't think we're going to last long. So within a year, yeah, my department pretty much got laid off. Like very few people stuck around. They all got merged into a different, reorganized in a different way. So I was right on that. But maybe if I stuck around, maybe that wouldn't have happened. I'm not sure. It's hard to tell. You know, it's really hard to tell. There was so many things happening at the same time going into COVID. And then after COVID, you know, you just don't know. You just don't really know. Yeah, I would have remote desktop, but it's for weather and holidays now. Yeah, remote spying. Yeah, I did that. It's very easy. Very easy. You had to spy, man. That's how you move up in the company politics too. You gotta do that. I was very friendly with the IT department for a reason. Yeah, so That it helps when you're friendly with the IT department. You know them very well. All right, guys. I'll see you around. Maybe later today. If there's anything interesting, semiconductors is still down 2% on the SOXX ETF, so nothing's changed there. I'm keeping my short there. I'm not sure if I would recommend, like, yeah, just short it. It's easy. The major thing you got to look now is like we got to wait for the dip. If that dip is coming on Wednesday, then it's better off you waited. If there is no dip, then oh man, I don't know. I just don't feel like there's going to be no dip. It's just going to keep rocketing. I just don't believe it. It's just too wild. It's like Microsoft, Google, Amazon, Meta, Qualcomm, all of them are going to go report good earnings. Microsoft, so all of them are going to report good earnings, great earnings, amazing, stellar earnings. And the market's going to go up into 7,500 right away without having a break. I don't know. Yeah, I don't know. I think we have to have a consolidation, yeah, for sure. So I just think everything's run too far with Intel and Texas Instruments last week. I don't think it's gonna happen. So all right, 2 hours. I'll see ya later.